Hey, how's it going, everybody? Back again, JT here with a good friend of mine from last year. We did a podcast together, Ram Ahluwalia from Lumida Wealth. How are you doing, my friend? Good to see you again.
I'm doing well, JT. Thanks for having me again. Hope you're doing well.
I am good. It's my birthday weekend, right? So I was excited. This kind of makes my birthday all the more special that you're able to hook up with us. I know our time is limited. I want to make sure that we get some of the questions answered because I have a few things that have happened. You know, we've all had we got a whole new administration in the White House in the U.S. We've had all the talk about tariffs going on. There's so much macro stuff going on. And then obviously there's a couple of wars going on. Like, what is happening, my friend? You know, and of course at the end of the day, you know, we're Ethereum focused, and I know that you have exposure to this space, and you have a unique insight that very few people have. Before we get to that, though, I noticed in your bio, beyond Lumida Wealth, which is your company, we could also talk about. But you have a label that is non-consensus investor. And I feel like that's a great place to start. We love talking consensus when it comes to blockchain. What's a non-consensus investor exactly?
It's someone that takes a contrarian approach to investing. It's very easy to be consensus. In fact, all the headlines you rattled off are well known by everyone in the market. So a lot of that's priced into the market. It's hard to think about how the world might be different, what's less well known. You remember buying ETHE in 2023? I was a big proponent of that. I think I led the charge on ETHE in 2023. That was non-consensus because ETHE at its lows had a discount to NAV of 50%. That was the grayscale product. It was the deep discount. Right. That's non-consensus. Mm-hmm. I remember in that year I was at the Bitcoin conference. Of course, I was talking about Ethereum there, kind of funny. And the panelist next to me said, well, there's no reason it can't go to 70%. I said, that's actually the signal to buy. There's so much fear here. And that's an example of a non-consensus idea. Owning Coinbase in 2023, non-consensus. Now it's consensus. Owning Coinbase today is fine, but that's not. It's when you're willing to go against the grain.
That's funny you mentioned that. Professionally, I never really made a lot of money earlier on in my years to actively invest, and crypto was my first hands-on investment. I did lazy stuff through an employer, you know, kind of let the the tax sheltered annuity or whatever it was that I just threw some money in. But then Bitcoin and Ethereum was my first active investment, and then to come full circle, the first stock I ever bought was Coinbase stock. You know, which is a crypto product, which, you know,
right.
So I sat in a room, Planner DAO, DAO. Planner DAO was certified financial planners. This is before, this is, 3 or 4 years ago when a lot of those people had heard of crypto, didn't know anything about it. Some of them knew enough about it that they wanted to invest on behalf of their clients, but they just couldn't. Their hands were tied. And I was the only crypto native in the room that was also older than a lot of these certified financial planners. I'm just a weird color of oatmeal, I guess. But so that does explain non-consensus investing. Do you feel like the way that the markets are working now, non-consensus investing is kind of becoming a path a lot of people are diverging into? Is this what Lumida Wealth does for its clients?
Well, it's a primary approach I have. Lumida Wealth, we are cross-asset class investors. We invest in public equities with an active strategy. We also have a passive strategy for people that want ETFs. We have digital asset strategies.
Okay.
We have private deals. We invested in CoreWeave pre-IPO. That's obviously done extraordinarily well in the public markets post-IPO. So we're cross-asset class. I think cross-asset class investing makes a lot of sense because Ray Dalio, although he's wrong, I think, about the end of U.S. financial markets and is kind of a doomer, he's right that if you can get multiple return streams that are uncorrelated, then you can do well. It doesn't mean diversify across everything, but diversify across ideas and themes. that you think are interesting. For example, uranium is a thesis we've had, digital assets, aging and longevity in healthcare. We have a thesis around banks and deregulation of banks. We have a thesis around the United States and also certain emerging markets that we think will benefit. So, but non-consensus is it really starts as a personality trait. It's very hard to be truly non-consensus and go against the grain. You're kind of unpopular at parties, especially at peaks in the market or at the bottom of the market, usually saying the opposite of what everyone else says in the room. There's a lot of psychological discomfort. It's not, you need to have a disposition for it. And you also have to have a good framework for investing too, because often the consensus is right. The long run stocks will go up. That's true. Yes.
Right.
Jeremy Siegel's talking about that, right? So, but there are certain times where everyone gets on one side of the boat and it makes sense to go on the other side of the boat. Sometimes you find an ignored, hated, unloved asset like Ethereum in 2023, and maybe it makes sense to go buy that.
Yeah, the idea of not being fun at parties. It seems like 5-6 years ago, I was like the guy at the party that couldn't shut up about crypto. It was like I was into CrossFit. I was so bad at, if you want to find out if somebody's in it, don't worry, they'll tell you. These days, and of course, after in the middle of a bear market, you always get your friends who are like, how about that? Boy, you really took one on the chin. And I was always the contrarian. I'm like, no, man, I'm getting excited. This is like, God, this is such an opportunity. Now, of course, in terms of, Ethereum, and not breaking that all-time high again, this prolonged kind of malaise in the market is, that does drain some people over time, but I'm still like excited. I've always been a 20-year guy anyway with this stuff.
Those signals are really important. I remember I was home for Thanksgiving, and my grandmother on my stepmom's side, she said, "Hey, how do I buy crypto?" I was like, "Oh boy!" And then in 3 weeks, we sold everything. I'm back in now, by the way, but I was like, "Yeah, that's not good. That's a contrarian signal."
Yeah.
I also remember moments in 2023 where people on Twitter would say, "Hey, Ram is a great follow for markets and equities. I just don't like the crypto part," and that was a buy signal. So you have it on both sides.
That's fair.
The thing about 23 and 24, you had Gary Gensler going against.
Oh my gosh.
And you've had, Grayscale was caught up in litigation, and turns out those were fantastic opportunities to go buy. And it's true for markets in general, right? Remember, like August 5th, the getting correction, and the aftermath of Liberation Day. So, that's what non-consensus is about. It's going against the grain.
Have you felt in your professional life with your clients that ETFs have really made some strides in your removing friction and barriers?
They make it so much easier. They make it so much easier to get exposure, and you have liquidity, and you don't have to worry about gas fees and checking etherscan.io to make sure you got filled on something, right? Like, there's a lot of advantages being on chain, as you know, like getting yield.
Right.
You can't get that yield in the real world, so there's still a lot of advantages, but in terms of getting exposure, like the ETFs, they do make it so much easier. I wish that they had ETFs with yield, like the staking yield should accrue to the investor when you own the ETF, but we're thinking about launching crypto strategies on chain with L1 advisors. L1 advisors essentially, someone can subscribe to a Lumida strategy in a non-custodial way. They maintain their keys. We make the buy-sell decisions, and the end investor approves the decision. And that way we can do things on chain and generate yield, and and be more active also. Because I think in crypto, my view is it's you have to be more trading oriented, not hodl. It doesn't mean you can't hold it for 2 years or a year and a half or run it through the cycle. But at the end of the cycle, you're supposed to sell and then rotate,
right,
and wait for it to get cheaper, and then you go buy it again. You can't, to your point, JT, you can't fall in love with any investment. You can't fall in love with anything. You have to be dispassionate.
I was curious. going along with you mentioned Gensler earlier, I feel like we've started to get some real victories coming through the SEC over the last few months. We've got a new person running it. We get Hester Peirce is tweeting out some positive momentum there. I feel like the Trump administration, love him or hate him, or whoever's working within it, above and beyond has been the most like bullish thing for crypto. Although I feel like they put a stick in their own spokes of their tire every now and then when they, release a meme coin and kind of, it's like, damn, dude, like we were hoping that this wasn't, it's kind of like you could celebrate these gains and then on the other side of it, it's like just the most tomfoolery crap is just.
I agree with you. I think the Trump win is an extraordinary win for digital assets and also Ethereum specifically, because of all of the crypto tokens, the ones that can benefit most from an SEC crypto securities framework is Ethereum.
Mm-hmm.
Like the big band, they would rather use Ethereum than other chains. Bitcoin doesn't have the capability of Ethereum. So, but the promise that has to be delivered. The new chair is going to propose a framework. I know he will. I would hope that they keep prosecuting frauds. Like, why do they let go Richard Hart? Like, come on. That guy's got to go to jail. Stuff like that. Yeah. I agree on the grip stuff. It's just a bad look. But overall, it's constructive. I think the most exciting thing about Ethereum right now, and not many people know this, I'm happy to share it with you on your show.
Let's do it.
I expect, this is breaking news, people. I expect you're going to see the equivalent of a MicroStrategy type offering for Ethereum within the next 6 months.
Yep, I've heard that too. I've got a lot of bullish feels going on. This leolanza.eth on X. Breaking, the SEC's Division of Corporate Finance just clarified that staking and proof of stake networks is not a security. That's a green light for ETH staking ETFs. So maybe this is your yield. Yeah, this was the Division of Corporate Finance as of yesterday. For those of you that are out there watching on X on the EV Mavericks handle, also mine at ProDJKC. We're streaming on YouTube and LinkedIn and Twitch. And if you're watching this, we're talking to Ram Ahluwalia from Lumida Wealth. We've got about 11 minutes left. His time is very valuable. And we kind of broke open the seam there on the impact of Trump. Let's go forward with it. Where do you think switching gears over to just the generic TradFi side of things, what's your thoughts on the tariffs?
Yeah, I'm a free market capitalism person. I studied economics in school and the lessons of history, and I'm also a disciple of Milton Friedman and Chicago economics. Yeah, the pencil. Yeah, I had that chance to meet him and his wife when I was 21. It's a very special moment for me. As a champion of human freedom, I have an incredible amount of respect for Milton Friedman. So. Tariffs aren't the best for the consumer. They're not best for markets. If you isolate China, I'm all for that. China's a bad actor. They need tariffs. But move the production to Mexico, move the production to Vietnam. Canada's our ally. We can import rare earth materials there, etc. That said, a 10% tariff level, I think the market can digest that. The market will get over that. You probably get a whiff of stagflation over the summer, like July, August. You will see a bump in consumer prices. It's different than Q4 2018 because the scope of tariffs in Trump Trade War 1.0 are far more narrow. It was just around China. This is everything. This is everything.
Yeah.
And then automobiles are 25%. You didn't have that back then. And automobiles the second biggest driver of spending, consumer spending. So you'll get a whiff of stagflation. The market will get over that. It could be a pullback. I wouldn't be surprised, if there was some pullback in the summer. But then by the time you get to September, October, it's in the rearview mirror. We are seeing disinflation. The core PCE number came out today, clocked in at 2.1% with expectation. That's great. Disinflation is happening. The battle of inflation has been beat. We'll see how the tariff story plays out, but it's mostly a rearview mirror story. And I think the big question there is going to be, what are the tariffs on semiconductors? Because that would impact, NVIDIA, Microsoft, Meta, and Google. And why that matters? It matters because they have a big market cap in the S&P and the QQQs. So if they have to spend 10% more on, then that impacts their earnings. So that's the main thing I'd focus on. I don't think 50% tariffs on China actually matter. They really don't. So they want to get deals done, and Trump will be more aggressive the more elevated markets are. But if markets sink, Trump will pivot, and that's exactly what he's done. He gets more confident and aggressive on tariffs at the highs, but at the lows, he wants to restore market confidence. He pulls Pete Navarro off of CNBC, then he deploys Scott Bessent, etc. But they have their policy doesn't. It's really kind of contradictory. Like when you have a trade deficit, you're importing capital. That is how you balance the payments, right? So when you import something from Europe, we're handing them dollars, and those dollars can only be used to buy something from America, like merchandise or services, or you buy bonds and stock. That's it. That's what importing capital is. So Bessent knows all this, but they have different factions in the Trump administration that have different goals and objectives. And Trump has his own kind of personal instincts around tariffs, etc. So, but I think a 10% tariff level can be digested. I think it can be managed. Might be 1 or 2 quarters of indigestion.
It'll be interesting to see if manufacturing base moves stateside. I know people scoff, and they scoff at the idea of building iPhones in the United States or just anything like that. It's like, did we just give up as a nation on the ability to work? This is the thing that kind of baffled me. It's like, are we just going to allow other countries to produce all of our goods and materials? What if we actually have a real macro hot war and we got no manufacturing base here to supply for it? Those kinds of things, I don't know. I hope some good can come out of it from a stateside manufacturing standpoint. But again, I don't think clearing the room with the machete is the way to go about doing it either.
Look at agricultural industry. In 1900, 1 in 2 Americans was a farmer.
Right.
Now it's 1%, and a lot of that's with productivity growth. And one reason why manufacturing is a share of GDP is declining is because we have far more advanced technology in robotics, including the General Motors and Ford. They have technology. It's not the Tesla level, but it is advanced manufacturing. So fewer people are required to create these outputs.
That's true.
And they are highly paid. Now, Americans also don't want to make Nike sneakers. This is a great quote. Everyone wants a Nike sneaker. They want a Nike sneaker made in America, maybe too, but no one wants to actually do the stitch work required for that. It's just mind-numbing work under a hot ceiling fan. And if it's not under a hot ceiling fan, then it's an expensive Nike sneaker. No one wants to increase the price of apparel and food, right? So, I think you're right on. People want their kids to go into healthcare, be a nurse, be a dentist, services. It's all about services. Help the young, nannies, help the old. That's where we have issues. We don't have enough kids. We do have. It takes a village to raise a kid. I know I have 3 kids, and it's a lot of energy. And help the elderly. The rising demographic pyramid. So that's where you need help in the economy. It's not really about manufacturing. In fact, the more manufacturing you have, the more cyclical and sensitive your economy is to the business cycle. Services are stable, right? The demand for healthcare is stable. The demand for insurance and financial services, all that's stable. Commodities are cyclical. That's why Brazil's economy is up and down whenever there's, some business cycle stress. It's so centered around commodities or the Russian economy as well. So
right.
But overall, I think that most of Trump's policies are pro-growth, to be clear. They are. Just a tariff one, if I could just modify that one and just edit that one out. Yeah, if I could just tweak it, just put a tariff wall on China. Be smooth sailing, be all good then.
Well, we got 4 minutes left, and obviously we got to talk AI. Where does AI fit in your 5-year window? Do you see it being the doomsday disruptor? disruptor that it gets portrayed as, or is it a hopeful outlook? Kind of where are you thinking in terms of investments and just the overall sentiment about the impact that's in front of us?
I think we're underestimating the impact from AI. It is going to transform work, play, how we live day to day, whether that's humanoids, whether that's investing, whether that's romantic relationships, you name it, all that's going to get changed. It's going to elevate quality of life. It's going to increase human productivity. It's going to increase inequality at the same time. The people that have critical thinking, sustained focus, and are creative will do best. People that have strong work ethics, people that can build companies using AI and humanoids, they'll do well. So you got to rethink how you educate yourself and your kids. You got to rethink where you focus your time. Content creation, like what you're doing, JT, it's going to be extraordinarily valuable. Authentic communication, community will be very valuable. Human relationships will be valuable. Land, real estate, all that's going to go up in value. But no, I'm an optimist. I'm excited about what we see coming. 5 years, it's going to see extraordinary transformation. I mean, by then you're going to have ubiquitous driverless cars. You're going to have maybe Gen 2 of humanoids. They'll still be clunky, but they'll be out there.
Yeah.
And it's an exciting future, but it's gonna, it's also going to disrupt a lot of industries the same way the internet destroyed newspapers and Virgin Mega Music Store and Power Records and book publishers, and the same way Walmart and Costco destroyed a lot of local merchants. AI is going to, I think, reimagine like accounting. I mean, so many areas are going to transform.
Do you feel like it's going to compress the change into a matter of a decade rather than 30 years? Like, the internet took 30 years really to kind of flesh out and do some of the things it does now. I think AI is just compressing the timeline.
AI is faster because it's delivered on the phone. It's delivered on the desktop.
Yeah.
The piping for them is already there.
Yeah.
So we're all using it every day. Now, look, my parents aren't using it every day. So the early adopters are there. The early adopters are talking like tens of millions of people, though. That's not nothing.
Right.
But they'll be there. They'll be there. And that transformation is going to be significant. So you really have to think through what's your personal competitive advantage looking out 5 years from now in the economy ahead, and cultivate the skills to have a competitive advantage and find a way to benefit from AI. Because if you own capital and you own AI, you're going to do well. So look, I like NVIDIA reported, we own NVIDIA. I love Taiwan Semiconductor, by the way, if you want some ideas, not financial advice, but those two names, Jensen said they expect $1 trillion in CapEx by 2030. That's a triple from where they are now. The hyperscalers, the Bag 7 companies are all spending on it and reiterating their spend on it. Meta spending $30 billion on CapEx, right? And Taiwan Semiconductor should benefit. So there are ways to position around these themes. I think it's important that you do that.
Well, Ram, it's always a pleasure. I'm so glad we were able. We tried to get you 2 other times, but kind of weren't able to link up. We finally got it done, man. I always love having you on, even for 30 minutes. Love to have you back again in 6 months or so, kind of take that temperature check. And Ram Ahluwalia, everybody from Lumida Capital, thanks so much. He's got a hard stop. We appreciate your time today.
Thank you, JP. Until next time. Happy to host you here in New York, too. Be well. Take care, guys.
Will do. Cheers, man. Bye-bye.
Bye-bye.
Awesome. Well, great. Here we are. It's Daily Doots time. If you open up dailydoots.com, you can check out all the week's Doots that we got going on here. We got so many people. We added probably another 3 or 4 people this last week. 1,213 total Dooters. We update this every week. At number 10 spot, JS Tears. Aiden Cairo at 118. Ethical Trade tied at 118. Crypto Al Currency at 121. Hani Abu at 127. Tricky Troll at 155. Benito 2030 at 172. Logri the Bard at 204. Harog has absolutely been smashing it up the charts. He put on 3 or 4 points this last week alone. He is in the number 2 position at 216, and Superfizz sits atop of the leaderboard at 200. 2023. Upcoming events, we got ETH Prague going on right now. Pragma Prague, same time. ETH Belgrade, June 3rd through the 8th. And the Lisbon, Portugal, the non-fungible conference from June 4th to the 6th. You guys jump on dailydoots.com. You can check out all of the incredible events happening around the world. All right, let's go to our weekly roundups. I hit the wrong button over here. Weekly roundups. Here we go. The morning roundup. Here we go. Frank the Tank chimes in. Ethereum way tarded chimes in at 26.40 on the price. $10.9 on the ratio at 0.2481 on that ratio. Yeah. Weekly haiku courtesy of JS Tiers. Epoch Committee. The attestation duty. Staking node Witty. How does he do it, JS Tiers? How do you do it? All right. Updates from Chompy Wompy. Day 93 of BTCS Incorporated ETH updates. The Ethereum Foundation announced staking 50,000 Rail tokens, allowing participation in Railgun governance and claiming protocol fee rewards. At ETH Prague, Vitalik Buterin discussed AI's potential, suggesting it should complement human evolution rather than compete. He highlighted its use in governance and the need for balanced technological integration. All right, the ship post of the week, courtesy of 12 Meatballs, sitting in the audience right now. This one's for you. Everyone got something but you, 12 Meatballs writes. Do not attempt to cross the claim fields unprepared. The terrain appears welcoming, flat, accessible, even generous. This is a lie. The air is full of expectations and wallet dust. The locals are feral. The newcomers are worse.
How dare you?
If you go, bring sunscreen, plausible deniability, and 3 forms of contribution. Leave your dignity at the gate. You won't need it.
Boom, boom, boom.
This is where airdrops landed, or rather detonated. Tokens scattered across wallets like pollen or shrapnel. Eligibility was whispered, not declared. Some said it favored contributors. Others said it punished activity that looked too much like affection. The algorithm tried to filter out symbols, but in the process, it unpersoned half the chain. Someone lived here once, briefly. Airdrops simply appeared like wild garlic in the forest, free for the taking, if you're at the right place at the right time. Then the pilgrims began arriving, clutching half-completed quests and spreadsheets of transaction hashes. They brought receipts. It didn't matter. The logic had already calcified. One man spun up 214 wallets in a single night and still qualified for nothing. Another posted a thank you gif and received governance. No one knows why. If you were miscategorized, you stayed that way. Mostly what came back was silence and a handful of worthless tokens. The ghost wanders still, clutching wallets that once held weight, insisting that they were early contributors, true believers in it for the tech, gamblers who dreamed of Lambos and received only sodium packets. The tokens unlocked too late and meant too little. Sodium packets, that's funny. The gardens are long gone. Launch promises scatter across the dusty plains like tumbleweeds. They say if you idle too long, a watch-only address in your own story. You become a watch-only address in your own story. The claim fields know who you are. Caring was never part of the protocol. Nice job, 12 Meatballs, for your shit post of the week, because we always like to save the best for first. User Fiberpunk2077 asks who will run provers and the air incentives, and Harog answers. Fiberpunk2077 this week is a Deuter level 16. Exciting about the huge step on real-time proving, but I have a couple of questions for those more knowledgeable. What is the financial incentive to run the prover cluster? I assume it is the same as the current block builders, i.e. MEV. Do we have a sense of how much infrastructure costs are now for block builders? Is the assumption the current block builders would migrate to real-time proving? How many provers do we need to ensure liveliness and censorship resistance? I'm assuming functionality will remain to build blocks locally and verify, but that would, in effect, basically be stopping the chain once we are used to 1000x throughput. Harag responds, block building and block proofing are two different jobs. In my current understanding, the plan is to publish a block on chain and then give the provers until the next slot to publish a proof. There might be some advantage to be a fully integrated builder and prover, but it probably is not a big advantage. And therefore, there might be enough room for an independent market to develop. I do not know about any discussion about remuneration, REMUN. I've never heard that word. Okay, it might be both remuneration. I don't know. And how it will work for prover nodes. But I could imagine they are getting paid when their proof is published on chain. As far as I remember, the proving cost per block should be extremely low. I think on the order of cents. At the moment, there is already a ZK prover market for all the different ZK L1s and L2s. The market is still very immature, but it sounds like there's a lot of progress and different models are being tested. A recent ZK podcast covers one of the approaches and the history a bit, and he has a link. As provers have almost no power over the network, we will just need one of them to do their job for the chain to work normally. If they do not do their job and fail to publish proofs in time, your smartwatch is not able to verify it and trustlessly receive the chain state or retrieve the chain state. Not good, but also not chain breaking. Depending on how far things are pushed, one might easily be able to rent a handful of old GPUs on one of the decentralized GPU markets and build proofs as well. Currently, these markets are far, far cheaper than anything a professional hyperscaler can provide. Sure, you can rent potatoes, but a handful of the potatoes of the future might be enough to make proofs. If we push things to the absolute limit, however, then only the most sophisticated entities can provide proofs, which is a centralization risk. For censorship resistance, we need the block builders to follow certain rules. Fossil, F-O-C-I-L, is such a proposal, which is being heavily discussed and will come in a year or two at the earliest. There will be medium nodes in the network, which are similar to the current validator's recommendations. My 2-year-old Nook is able to validate 1,000 to 10,000 transactions per second. Not too far away from still being able to validate a highly scaled and ZK proven chain. In a few years, with newer hardware and more optimized clients, I guess we could be able to validate the chain even without ZK proof. So I'm not too worried about this issue at the moment. Good job, Fiberpunk 2077, with the good questions, and thank you to Harag for answering them for all of us. User PA7X1 notices an interesting change in block size after Pectra. PA7X1 is a deuter number 89. This is a very interesting chart. You can see that with blobs, we reduce significantly the size of the blocks. Let's open this up. This is on Etherscan, showing the sizes of the blocks. Okay, good. I gotta reload Reddit on my side. Apologies for a short delay. With the latest upgrade in Pectra post May 7th, you can see some spikes in the block size have been tamed. We went from having regular spikes of 120 kilobyte blocks to having very regular 90 kilobyte blocks. That gives us a 33% increase today simply by placing block sizes closer to how they were pre-Pectra. So even the most conservative of validators could quite confidently signal 50 million gas because they were already operating at those levels pre-Pectra. Well, thank you. Very good. There you go. Average size block chart. Let's go to the 1 month chart. Let's go to 6 month chart. Okay. Maybe a year. Yeah, you see those spikes right here. Is that right? I think I'm reading this correct. All right. Good stuff. All right, Cobber 1211 shares a unique protocol built on Ethereum. It's a relative newcomer, I think. Yeah, Deuter number one. Deuter number one, getting on the weekly show. How cool is that? All right, good for you. Let's see. I lost my soundboard. Oh well, keep going. Got my local recording good. Streaming still going good. I don't know. I lost my soundboard. Let's try something real quick. Hold on 1 second. Stand by. Boom, 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 boom. Doom, 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 doom. All right, still doesn't work. Who cares? All right. Cobber, let's see. The headline is Cobber shares a unique protocol built on Ethereum. I'm reposting here because I don't want my reply to get lost under a post with 4 upvotes. Also because I want to shield my favorite project built on Ethereum. I'm surprised Claros doesn't get more attention on this sub. Maybe it's because they don't market as much and it's pretty low market cap, for now at least. But for those who don't know, it's an arbitration protocol where jurors or token stakers rule on disputes. At any time there's a dispute between multiple parties, they can raise it with Claros, which creates a case in which the parties submit evidence to argue their side of things. Interesting. This case is then sent out to a randomly selected pool of jurors to vote on, with the majority outcome winning. The protocol can be applied in any sort of situation that requires arbitration. Obviously, this model raises a lot of questions. For example, around preventing juror corruption and collusion, and lazy voting, 51% attacks, etc. I won't go into all that here, all right? But I will say that the protocol has a lot of cleverly designed mechanisms for mitigating these things, allowing for appeal rounds, built-in token forking, carefully tuned juror rewards and slashing, a hierarchical court system, golly, that address all of the common concerns I see raised. The idea is credible enough for Vitalik, and I have shielded it multiple times. He's called it, quote, a really valuable and important piece of infrastructure for the Ethereum ecosystem, unquote. Ultimately, the aim is to provide a resolution process that is significantly faster and cheaper than traditional arbitration, without sacrificing any of the accuracy or the fairness. Unlike some protocols, which depend on hype and speculation that they might someday be useful, Claros is already demonstrating real-world value. It has ruled on over 1,500 cases at this point. Historically, these cases have involved purely on-chain applications, such as on-chain governance, digital identity curation, prediction market oracles. But it is increasingly dipping its toes into the trillion-dollar real-world arbitration market. They have recently started a trial with MetLife, one of the largest global insurance providers, and another trial with the local government in Mendoza for resolving neighborhood and consumer disputes. And for not just trial stuff, there's actually being used in business. It's currently integrated with Lemon.me, a big South American crypto exchange, and has been used to resolve over 100 consumer claims. Compared to Lemon's process for claims, Claros has improved user retention and satisfaction, lowered resolution time, and lowered dispute costs. Also, some notes. The only real competitors in the arena of subjective oracles, for example, UMA, are pretty unsophisticated. Usually they just copy and paste the DAO model without any considerations made for the peculiarities of dispute resolution, which often leads to disaster. Version 2 of the protocol is launching very soon with a wealth of new features, especially significantly lower gas fees due to migrating from Ethereum mainnet to Arbitrum. This will enable a massive number of low-value, high-volume use cases that were not previously possible. The TLDR? Claros is good. All right, thank you. Very good, very good. Let's see. Flashy Butterfly 6310 discusses the value drivers behind ETH. All right, let's go. Let's check it out. Flashy Butterfly 6310 is a duder number 3. I'm a strong believer, and by extension, the value of ETH itself. One of the main criticisms I often hear about ETH's ability to actually capture the value created within this ecosystem. See this example at 1 hour and 4 minutes, 56 seconds, which is in French. Lots of cussing. To sum up the criticism, it's often argued that Ethereum, like the early open source internet protocols such as TCP/IP, HTTP, FTP, SMTP, etc., will ultimately not capture much of the value generated on top of it. According to this view, most of the value will be captured by applications and companies built on top of the platform. For example, website services like Amazon built on top of the internet, rather than by ETH, the protocol's native asset. However, I believe Ethereum is fundamentally different in this regard. Ethereum has built-in value capture mechanisms that the original internet protocols never had. The most important of these is the utility of ETH itself. It is required to pay for transaction fees or gas, secure the network through staking, and is increasingly used as a trustless form of money within the ecosystem. These mechanisms create a direct and ongoing demand for ETH, allowing the protocol and its native asset to capture a meaningful share of the value generated by activity on the platform. How do you respond, or would you respond to someone bringing up this kind of argument? What are the specific features or mechanisms that allow Ethereum to capture value? How is it different from other open source protocols that serve as infrastructure for applications when it comes to capturing value from the ecosystem? Well, I'll speak for myself when I say this. None of those other protocols ever had a token, and that's the fundamental difference. So people can use the token to power the network, and then they can also speculate on the value of that token over time. It's the same to me as owning like an index fund of sorts. I don't know. Logary's up on stage. I don't know if you want to chime in at all. I just figured I would kick that out there. That's my personal take. So I'm curious. I want to go to the thread because I'm curious what other people said underneath there. Numerous runes, store value. Let's see, HSUKI. So like USB and HDMI, but with transaction fees instead of licensing fees. That's what I wanted to hear. I actually commented on that I love that analogy, right? So instead of like licensing fees, right, it's transaction fees. That's pretty brilliantly put. Echo and Closer wrote, none of the other protocols listed have a provably scarce token associated. That's exactly what I said. Rhythm of ETH says ETH is much more than a protocol. It's best to equate it to telco companies laying transoceanic cables and all. They had a golden era for decades because they were the backbone of the internet. Ethereum will be the backbone of crypto. It's very good. Yeah, these are all good thoughts. So Flashy Butterfly 6310, I'm glad you posted here, and congrats on making it to the weekly show. User Physilytics explains why we are still waiting for no approval swaps post Pectra. Physilytics been around for a long time. Duder number 27. Yeah. We're going to keep seeing confused users about this, about no approval swaps. And there's many thousands who are confused but don't even come here. With Pectra came just the back end side. It's supported by the protocol now to batch, approve, plus swap in one transaction. But utilizing this still needs to be implemented into wallets and dApps. MetaMask should support it already, and Uniswap too. Who else? Who knows? Guess we have to follow social media accounts for all the wallets and dApps now to know when we can actually use this feature. Hey, that would be another website for Hani Abu. It's a pretty big
go
ahead.
It really just feels to me like we launched this thing, and as though the Ethereum Foundation hadn't touched base with any of the users or any of the apps before we launched it. It's like, great, this works. Okay, who's aware that it works, right? Did any of those, like MetaMask, have any type of intro video saying like this is now available? If I log into Google, sometimes you're like, look, I've got this new feature or something, right? Some overlay that comes up. Nope, absolutely nothing anywhere. So like, okay, it's there, and then we wait another year for it to start to actually be effective, right? It feels like this is something that since it was known that it was going to be in the hard fork for months, they should have been doing some connecting with the app teams to discuss like, hey, here's the experience and the code that this front end was writing to add this in, right? And you can share that as a library across the ecosystem or something some type of coordination should have been done in the months leading up to the hard fork to make it so that at the day of launch, there is now a new Ethereum feature that people can celebrate with the hard fork, as opposed to whatever the hell this is.
Very good.
Like, it was known, right? This was like, there is a set date for a hard fork. There, like, this feature is has been in a spec, has been implemented by multiple client teams. But the Ethereum Foundation doesn't interact beyond the client teams, right? They don't go to Aave. They don't go to Bancor and, the Carbon Dex. They don't go to... the thing about single swaps is not just swaps, right? It's every time I have to interact with a liquidity provider position, right, and deposit them to Convex, guess what? First it's approved, then it's deposit, right? Then maybe it's stake, right? It's prolific in DeFi. And so you'd think that engaging with like the Convex team, they could have provided a better UX if only, they were engaging with the app teams and saying, this is not just this feature is going in, but here is the code to use it on day one in your app. At least some patterns for how to use it, because it feels like now there's going to be a massive UX exploration that's going to take another year or two to settle on what the best patterns and become familiar are. Just like it was we had during the food coin explosion in 2020. What's the pattern for yield farming? Well, we settled on some, but for a while there, like M Stable was doing something very different than Yearn, which was doing something very different than Harvest Finance, which is doing something very different than Pylon or some of the stuff you've never heard of. There's just this long tail of people trying different ways smart contracts worked. Some would return like an LP token. Some would earn interest Aave style by having it tick up. Some would have it, you'd have a deposit fee, right, or a withdrawal fee, or they take a percentage of what was earned or something. Like how the billing was on it was different. The tax implications were different. The smart contract layer was different. It just took like a year for it to kind of settle into the pattern that we have now. And if we go through the same type of thing for, for this type of account abstraction process, it's just going to be messy and create a lot of wasted work across 20 different teams trying to do it 20 different ways, 20 different UXs, writing so much extra code. It's inefficient from a development perspective. It's inefficient from a user perspective. It'll be a turnoff while you have all these differences and makes the Ethereum ecosystem feel more fragmented and harder to use than competitors that take this biz dev, effort. It just feels like a real opportunity loss because this is a major feature addition that could do so much to improve the UX of the chain, and to date it hasn't, right?
Yeah, it's you feel like they could have had a lot more hype leading up to the release and get the team
engagement
buzzing
with
about
apps.
it. Yeah,
and then the apps could have done the hyping, right?
Sure. Yeah. Yeah, well said. Yeah, it's kind of like the ability of when a car manufacturer just quietly releases like a twin turbo V6 in a car line and didn't tell anybody about it, but it's actually the most badass car that never got attention. It's like why didn't? Yeah, you're right. It's like they just, and then people were confused about it. And wasn't there something, we had a show a couple weeks ago, I think somebody brought up like, this is actually going to be a kind of a detrimental thing if people don't, it's kind of like the one click way to rug yourself because it does so many things at one time. And I don't know if that was just I think it was a kind of a FUD play, but it was still kind of one of those deals where, it removes so much friction that it just makes getting rugged even faster. So I don't know. I just figured
I'm not worried about the ruggability of it. It's
right.
People that are going to sign something they don't understand or to a contract they don't understand. If you're going to sign the approval to begin with, you've already been rugged. Right?
Yeah.
The approval is all you needed to get rugged anyway. So at this point, what difference does it make? If you're going to sign approval to a contract you didn't understand, you already lost your money. It doesn't add anything for security to have the extra thing. The approval step is there for a kind of security reason. in that ERC20s, they have a call that refers to something called message.sender, which is the initial like transaction signer. It basically says only you can send it unless there's approval, right? Which stops things like you interact with a contract and then somehow that contract had like a proxy and that proxy gets upgraded. Now you didn't think it was sending tokens, but now it is sending tokens, right? And it doesn't just send one token, it tries to send every token into your wallet all in one sweep or something.
Right.
Because the proxy got jacked, and you just invoke the proxy and said like call me.exe, right? Like, and then it goes and takes every token in your wallet. It prevents that kind of thing, right? Now, if you were to try to do that with the smart contract, the simulation should show approve token 1, 2, 3, 4, 5 for infinity amount and then sweep them all, right? Like it should be fairly obvious there's something nefarious going on when you're like, I just called a deposit, call it contract on convex. Why is it trying to sweep all the tokens from my wallet? This should be a fairly obvious thing, right?
Right.
So there's a reason it's there. I don't think that the account abstraction does anything to hurt the security factor of this. I think they've been very careful about that over the years.
Gotcha. Yeah, thanks for that color. That's Logri the Bard, our technical interviewer here on the Dudes Live podcast. We were streaming a little while ago. I just fixed the stream, so if you're tuning in, I apologize for that. I'm not sure what happened, but I got all the streaming keys. We're now back streaming again on YouTube, LinkedIn, Twitch, and 2 different channels. On X, you can follow at ProDJKC. That's me. At EV Mavericks is the other channel that we are streaming on now. I can take comments if you type in comments on, I believe, Twitch and YouTube and on Discord in the Dudes podcast chat. They will show up on screen if you got questions or just want to make a comment. That'd be great. All right. Make sure you like and share this stuff out there. I can't believe this is episode 113. Great job, team. Good job, everybody. All right. ETH2353 shares a report on the risks of pumping the gas, and user Sam CM, one of the authors, weighs in. Interesting. ETH2353 is for this week, a Duder number 36. A great blog post, we got the link here at dailydudes.com, was published today by the EF DevOps team, the ETH Panda Ops, that makes an analysis of the impact of the recent gas limit increase to 60 million on the Sepolia and Houthi testnets. It's well worth the read for anyone that runs validators or is interested in seeing the L1 scale through gas limit increases, like user Waytarded and about 150,000 validators on Ethereum currently signaling for 60 million gas limit. This is exactly the kind of analysis that, in my opinion, should be included in each and every post calling for higher gas limits. Instead of almost blindly calling for a higher number, we already have 15% of the network signaling for 60 billion on mainnet, and we don't even have a rough idea of how safe that is yet. Notably, here we go, there is a large difference between the 2 networks on both metrics. This may indicate a sensitivity to large execution state size. This is a particularly interesting result as mainnet has a much larger execution state size, and we'll be monitoring this closely as we continue to scale. Mainnet Ethereum has a large state, and with an increased gas limit, it will grow even faster. This is important to keep in mind when considering higher gas limits before we have things like state expiry. We can't push the gas limit into the sky just because we can execute large blocks quickly enough. Apart from the issues surrounding state growth, we also need to account for worst-case blocks that are specifically constructed by an attacker to take as long as possible to execute, a sort of denial of service attack. To wrap up, here's the conclusion from the team. Based on the data from Houthi and Sepolia, 60 million is safe as far as block and blob propagation is concerned. It is very important to note that these testnets are not representative of mainnet. We will be conducting additional analysis on mainnet in the coming days. But for now, we can say that 60 million is possible on a fundamental level, unquote. Side note, this may sound like I'm personally strongly against a gas limit increase, but that's not the case. I just want it to be done with great care. That was ETH2353 making that comment. One of the team members, Sam CM, says, thanks, it was fun to be, thanks for linking the post. It was a fun one to dive into. He quotes the quote about Wade targeting about 150,000 validators currently signaling. Sam writes, given the analysis and combined with the fact that we sat at 30 million for so long, I personally think 60 million is safe. I'd much prefer that we went to 45 million first and then 60 million, but coordinating these changes has a large overhead. In saying that, 60 million should be the absolute max for Pectra. There is a handful of scaling related EIPs scheduled for an inclusion in Fusaka, and we must wait for them before pushing beyond 60 million. Sam goes on to respond regarding the kind of analysis that should be included in each and every post calling for higher gas limits. Sam says, completely agree. While we'll continue to do this style of post, I'd really like to encourage others to also dive into the data if they're interested, and all of our data is published freely, and you can check that out at ethpanda.ops, ethpandaops.io, and then they got a data page there. Okay. Goes on from there. Shameless side note and shill. We're trying to really scale up our data-driven approach to making decisions, and that means we're looking for more data contributors. None of these analysis posts are possible without those users who contribute their data. And the data set is starting to become an invaluable resource for core devs and researchers. If you're running a node and are interested in contributing, you can learn more here, and there is a link included. And it says contribute data. Okay, so we can get people, we need to get some mavericks on that. So I encourage you to go check that out at dailydoots.com and look at today's let's see, May 30th post, episode 113. User Harog discusses the drawbacks and limitations in pumping the gas. The drawbacks are state growth, history growth, bandwidth limitations, and to a lesser extent, CPU usage. The biggest one is probably bandwidth, which might get addressed in the upgrade after Fusaka with ePBS. ePBS also helps with CPU usage, as it allows the full 12-second slot time for running all the transactions. History growth is starting to get addressed in the coming weeks with history expiry. State growth is unfortunately a bit further out, as the Verkle tree upgrade have most probably been scrapped and is currently being redesigned. The difference between 60 million and a 100 million is not that huge. So there is, in my opinion, not a simple argument to make for one or the other. 60 million is mostly what people talk about and is currently being tested on the testnets. If you go up to 150 million, I am currently of the opinion that this should only be done once we have ePBS because of the bandwidth constraints some nodes have, as we will most probably also decrease slot times in the future, which in effect increases the throughput without increasing the gas limits. It is unwise to push the gas limit to their absolute limits, which would make it necessary to reduce them again later on. And yes, I'm signaling for 60 million since the Pectra upgrade. I wrote a much longer piece a few months ago. Most should still be valid. And he has a link to his comment from a few months ago. All right. Harog is a freaking gem. Okay. 12 Meatballs got a double shout this week. Ho! 12 Meatballs got a lot of hope from the talks of day 2 at ETH Prague. Day 2 of ETH Prague, and if possible, even better presentations than yesterday. The highlight for me was hands down Tim Berners-Lee being quizzed by Vitalik Buterin. Tim Berners-Lee talked about how it was all meant to be decentralized. Anyone can run a web server. Anyone can have a website. But that's not how it turned out. It was great to see them bouncing ideas back and forth, talking about how things could look or should look for Web3. I also attended Ayame Gucci's Fireside Talk, where she got EF issues out of the way at the start and then talked with Christopher Fabian of Giga about how they got UNICEF on board. This connected nicely to Maurice Chiodo, a Cambridge math professor, talking about ethics of AI and blockchain and companies who aren't quite sure what they are doing yet, followed by our very own Paul Brody, who injected the crowd with a large dose of opium for the business adoption of stablecoins and smart contracts. Yes, I agree. He does do the opium bit. He's good. It's hard to be worried about the future of Ethereum after hearing all these great minds talking about what they've done and what they expect of the future. I even love Joachim Schwerin talking Web3 in the EU. He's a huge advocate of privacy and seems like exactly the kind of voice that Europeans need to have representing the space. Also quickly dropped the word in favor of Tornado Cash. I'm looking forward to writing more detail once I'm home, and I'm really hoping that the talks will all be available on video. They don't seem to have confirmed that yet, so I've taken tons of notes. Tomorrow is mostly ETH Global Progma, though I'll sneak back in the afternoon for one or two more of the ETH Prog talks. Then I'm going to quietly collapse for a day. Yeah, thanks for that, 12 Meatballs. There was a post, I'd have to find it. I don't know if it was on Twitter or Paul Brody. So apparently he was talking before Vitalik. And he wrote on Twitter, he's like, I know you all came to ETH Prog to come and watch my talk, but please don't everyone get up and leave, as it will make the presenter after me kind of feel let down. Or something like that. It's like Vitalik is after you, after Paul. And that was just like he's got such a funny sense of humor. But anyway, all right, wrapping up this week, user Harog just discovered how easy it is to permissionlessly force. Let me read this again. Just discovered how easy it is to permissionlessly include a transaction on L2. Ooh, you can permissionlessly force to include a transaction on layer 2. That's spicy. Today I learned that force including transactions into rollups is super easy. I recently withdrew some funds from Unichain and used one of the canonical bridge interfaces suggested by Unichain. If you click on the config symbol on their interface, you can enable expert mode, which allows you to force transactions onto the rollups. They have a force transfer and force withdrawal and custom transaction. This means you can make a transaction on Ethereum layer 1, which then forces the sequencer to include whatever you said they should do. You can make a fully custom transaction, like withdraw your funds from a pool or do a swap or so on. This is a very important piece to prevent censorship on the rollup, even though there is only one entity controlling the sequencer. I was not aware that there exists such a nice interface already. I tried it with Base and forced my transaction and was included on Base within 3 minutes of doing the transaction on Ethereum L1. That's pretty impressive. Out of the box, they support Optimism, Mainnet, Base, Unichain, Inc., WorldChain, Zora, and a few others. It is great to see that the UX to do even more exotic things on rollups have improved massively. And that does it for this week of the Daily Doots, Doots Live podcast. Once again, thanks so much to Ram Ahluwalia for hanging out with us for a half an hour today. I always love to get him on. I'm going to try to get him on about every 6 months. He just has a great take on all the macro, and he's really got a pulse on things. If you don't follow him on X, well, you should, at Ram Ahluwalia. His company is Lumida Wealth. He's been a real good friend of the podcast for a while. So thanks again, Ram. All right. Well, there we go. So I think that's it for this week. Stick around after the live stream. We'll continue the party in the hotel lobby down on the voice channel on Discord for a bonus hour of popcorn. It's a fun place to let loose when the parents aren't watching on YouTube. Hi, Mom. On behalf of the Ethfinance Daily General Discussion and the EV Mavericks DAO, this is the Dudes Podcast, and my name is JT. Cheers and big hugs from Kansas City.